Thank you for joining us. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. Today on the show, African Development Bank refutes reports that it has called off loans to Nigeria, says the bank strongly supports Nigeria's economic recovery efforts. Chad wants to cut off Glencore oil supplies in debt row. Plus, MTN to defend $4.2 billion suit in South African court. We'll begin with a story that the African Development Bank will consider the release of the $400 million loan to Nigeria if the government requests for it and secures the approval of the AFDB board. In a statement issued today, the AFDB denies a Reuters report that a development finance institution has called off loans to Nigeria. The AFDB statement says the institution is highly encouraged by the economic recovery of Nigeria from recession and salutes the government's efforts towards diversification of the economy. The AFDB says consultation is ongoing with the Nigerian government on how best to continue its support for its laudable economic and growth recovery plan through investment projects. In November last year, the AFDB board approved a $600 million loan to support Nigeria's efforts to cope with macroeconomic and fiscal shocks arising from massive decline in oil prices. And to the markets now, the Nigerian stock market is still treading waters, down 0.72% at intraday. Now, international breweries, Stanbic IBTC and Unilever were the major laggards at intraday. However, the market in South Africa was up 0.03%, while Egypt was also in the green at 1.33%. The market in Kenya closed positive on Monday after the incumbent President Uhuru Kenyatta was announced as the winner of the rerun election. In the Middle East, markets were mixed at intraday. Saudi Arabia's stock market stayed soft despite a big rebound by petrochemical company Petro-Rabi. The Saudi stock index dropped 0.3% after Petro-Rabi's gain was offset by losses in the banking and insurance sectors. Qatar's index edged down as well, 0.38%, because of banking shares. Qatar First Bank fell 0.8%, while Qatar National Bank, the largest bank in the region, sank 0.6%. However, the Dubai index was up 0.17%, while market in Abu Dhabi also traded up 0.51%. In Europe, stocks were slightly higher in early trade as investors digested a fresh batch of corporate earnings. The Pan-European stocks 600 edged around 0.1% higher during early morning deals, with most sectors and major bourses in positive territory. Travel and leisure stocks rose 0.4%, led higher by budget airline Ryanair. The company reported an 11% rise in net profit for the first half of the year and says it was still on track for robust full-year results despite recent flight cancellations. The shares rose to the top of the benchmark on the news, up more than 5%. Europe's banking index led the losses, down 0.4% on earnings news. French bank BNP Paribas posted forecasts beating third-quarter earnings shortly before the opening bell, with net profits seeing an 8% rise from the same period last year. Its shares slipped around 3% after the lender said group revenues had fallen year on year. And in the U.S., the stock index futures pointed to a higher open today as investors got ready to pour over another cluster of corporate earnings and economic data. Earnings season will continue to shake up sentiment on the second trading day of the week, with MasterCard, Pfizer, and more set to report. A downpour of data is also expected to keep Wall Street busy during trade. First off, the Employment Cost Index is set to come out at 8:30 a.m. Eastern Time, followed by the S&P CoreLogic Case-Shiller Index by 9 a.m. Eastern Time. At 9:45 Eastern Time, Chicago PMI is set to be released, with consumer confidence and housing vacancies due out at 10 a.m. The Dallas Fed Texas Service Sector Outlook Survey will then come out at 10:30 a.m. Eastern Time. And the Central Bank's Fair, the Federal Open Market Committee's two-day meeting is set to begin today, with an interest rate decision set to be announced on Wednesday. Investors will be paying close attention to this event to see if they can garner any information about how the U.S. economy is currently performing. And in Asia, market there closed mixed today as investors in the region digested the release of China's official Purchasing Managers Index and the Bank of Japan's rate decision. Japan's Nikkei 225 paired losses to close flat at 22,011 points. The Bank of Japan today kept its monetary policy steady after a two-day meeting. The central bank said it will maintain the short-term interest rate at minus 0.1%. Across the Korean Strait, the Kospi rose 0.86%. The Australian ASX 200 lost 0.17%. Hong Kong's Hang Seng Index was flat. On the mainland, the Shanghai Composite had some losses made in the last session to finish the session 0.12% higher. The Shenzhen Composite rose 0.69%. To close at 2,002 points. And the Nigerian Stock Exchange and the London Stock Exchange are looking to further deepen their partnerships in capital market development. This was made known by the CEOs of both exchanges at the just concluded Nigerian Banking and Investment Forum at the London Stock Exchange. According to the CEO of the Nigerian Stock Exchange, Mr. Oscar Onyema, Nigerian market remains resilient and both exchanges will work towards supporting small and medium-scale enterprises.
At the birth of this partnership between the Nigerian Stock Exchange and the London Stock Exchange, amongst other objectives, we hoped to create a flagship conference that could provide a platform for interconnecting our market participants and other stakeholders. A platform for knowledge sharing and dialogue aimed at evolving pragmatic solutions to move our markets forward. A platform that could be credible and referenced in our industry and markets. It is commendable that 4 rounds in, this being the 4th one, the enthusiasm and attention this event elicits across our markets is remarkable. I congratulate the organizing teams from both exchanges that have stirred the cause of this initiative and somehow managed to raise the bar at every installment. Just over a year ago, when we last convened,